Hello, everyone. Welcome back to GovConHacks Live. I'm Ashley Duell, and I am joined by Natasha Velez.
Hi, everybody.
And we're going to be talking about financing your contracts tonight. We have a lot of audience questions that were submitted around this topic. There were several different scenarios provided to us, so we're going to try to go through all of the different ways that we know of and have known, even the creative ways that companies have been able to fund their contracts. So, um, with that, let me go ahead and address the questions that were submitted. I'm going to just read the questions, and then we're going to make sure that throughout the episode we cover all of the questions that were asked. We have how to price products and get financing for the products, having funding for a contract when it comes to paying subs and employees before you get paid, and the best niche with little money. So, on that note, I'll hand it over to you to kick us off on sort of the lowest level funding options, and we'll kind of work our way up to the more complex types.
Yeah. So, I mean, how does anyone get funding to get a business? What's nice about the government is that you have what essentially is a contract with the government, and banks that, normally do business with the government understand that the government's going to pay their bill. So there's minimal risk, low risk, not like no risk, but there's low risk. So you have better chances of getting a loan. So I mean, we start with the small basic ones, right? Self-funding. So you save your pennies and you start small and you scale. That's always a methodology that, a lot of people like to go with. What's something that I can do? Um, but I can front the bill for 30 to 60 days and then start getting that money back using those profit margins to fund the next month and going forward from there. Um,
That was
and
actually
doing
one that was on
something,
my list.
yeah, kind of
Vendor
like a
credit.
realistic approach,
Right,
right?
vendor credit. And that actually is one of the answers to what's the best niche with little money. So,
Mhm.
think about micro purchase thresholds, right?
Yep.
$10,000 or under for products, 3,500 for services. So products is typically best. And with the example Natasha just gave, vendor supplier credit, um, having a good relationship with your suppliers is critical. And
Mhm.
in a great situation, they're going to more or less end up fronting the government the product and then waiting till you get paid to be reimbursed. So that's a great
Yeah.
point.
Yeah, I had a client at one point. She had, I think she went after a bid that was, I want to say about 75% hardware. Um, and she was struggling. So her credit cards were like maxed out. And so she went to the vendor and she was like, "Hey, listen, I have this contract for 5 years. If you give me a blanket purchase order, I promise you for 5 years, I'm going to buy off of you. If you can help me with some net terms, if you can help me with like, don't bill me until it ships and they receive it. And if you can give me a good, waiting for those net terms, like if you can give me like 90 days. And by that time, the government should have received it, accepted it, and paid their invoice. And they did because that was 5 years of business. And she
She
was
was good at
bulk buying.
negotiating too.
Yeah, it
Yeah.
was bulk buying. Um, so you don't know what you don't know. And you lose literally 100% of the chances you don't take. So ask, bargain. They're business people, your business people. They lose your business instantaneously if they can't help you. So starting that conversation. But yes, um, we skipped a couple, but we went straight to negotiating with your vendors, right?
Well, I'm actually kind of glad that you did that because the others on the list are gonna, in most cases, require some element of credit, right?
Yeah.
Um, and for those of you who might be new, Dunn's Dun and Bradstreet is still the keeper of your business credit. So
Mhm.
just because it was no longer required for you to register in SAM, they still do sort of manage and they automatically report on what's out there and publicly available about your business. Now, they
Yeah.
do have very hard sales, just so you know, getting a Dunn's number is free, but Dun and Bradstreet is to your business credit similar to Equifax and Experian are to your personal credit. So
Mhm.
you might have to, in order to qualify for larger lines of credit with your bank, or, for lower interest rates, you may have to pay Duns' monthly fee for a little while you update your credit history with them,
Mhm.
and sort of self-report. And when the bank checks your credit, naturally, that positive payment history, including what was available on public record and what you added, now is going to really more articulate or better reflect your financial stability. But unless you take proactive measures, it
Mhm.
does become difficult to get some of the options like the loans, right?
Yeah.
Sometimes you mentioned credit cards. I have had quite a few clients who have self-funded their contracts, and that's simply usually because they don't know of a better way, right?
Yeah.
I have one who she maxed out her credit card at a pretty high interest rate and then didn't get paid for over a year on her contract.
Yeah, that'll
So
make great.
that's kind of a worst case scenario. But I
Mhm.
would avoid credit cards when possible. And so let's say that you're established, you've built up your business credit. What are some of the options, Natasha, that would be viable for someone who has at least some line of credit?
Well, you can start with your bank. Your business bank, right? Not your
Mhm.
personal bank, but your business bank, and they know your profit and loss, your balance sheets. They know how much you have coming in and out. It's in their best interest to help you. So starting a relationship and having a small business advisor at your bank, and maybe, having that sit down and really kind of negotiating some credit terms. So there's a couple that I can speak of from personal experience, but you have your basic, small business loan, which is just a traditional bank loan. So you can, let's say, borrow $100,000 at, we'll say, I don't know what the rates are nowadays, like 6, 7, 8%, right?
Right.
Um, so at that point, until you pay it back, you're paying whatever you've borrowed at that percentage. Um, Sometimes that can be hard to get because then again, you need to have credit. But you also need to show how much money you're bringing in, what your profit and loss looks like, what your revenue looks like for the past 3 years, to show some stable income that you can, in fact, pay it back. So it's not just your credit, but it's also how much in finances are you, how much in revenue are you bringing in so that you can prove that you need that amount of money. Um, the next
And that
thing,
you can pay it back for
yeah.
sure. Yes,
So
that you
they're
have the
taking a
revenue
risk.
projections to repay
So if
that
you
loan.
have like a revenue of like 20,000 a year and you're asking for like 200,000,
Yeah, there
so
might be a little miss there.
yeah, so it doesn't mean you won't get a loan. It just means you won't get the full amount that you're asking for. They'll want you to again scale up. Um, so that's a first start. The next one is a revolving loan. A revolving loan tends to be my favorite, because the bank will give you what's called a revolving loan, and let's say it's $100,000. So for $100,000, you have an account with the bank. You can borrow against that whenever you want. If you don't need it right now, that's cool. It just sits there, but you don't pay interest on it. You only pay interest on what you borrow, kind of like a credit card. So you can borrow, I only need 10,000. You take 10,000, put it in your checking account, buy your materials. Then you pay your bill back, and you've only paid a percentage on the amount that you've borrowed. Now that you've paid it back, you don't have any more interest, but it's always available to you should you need it. So that's my personal favorite. Um, so I always try to look for that. Um, Other than that, SBA loans, I guess. Then we go into SBA
So
loan.
on the SBA.gov website, there
Mhm.
are several different funding options, and SBA has partnered with certain lenders to sort of back the loans that they're giving you. So if you go on to SBA.gov's loan on their website, they have the funding page. Go to loans and search for a partner, one of their partners that they've sort of more or less pre-approved. Now, one thing, about loans, credit, money, collateral. So that may or may not be the best first step, depending on what industry you're in. If you're commercially established, you're not going to have much trouble at all getting a loan to fund a government contract. You're probably even going to be relying on some of your profits in the commercial space. But for those of you that are new, definitely build a relationship, like Natasha said, with your business institution. I do like to have a smaller credit union and then also, a larger bank. I'm not a huge fan of some of them. I'm pretty picky. I do like PNC.
Mm,
And a lot of these institutions will offer various programs, whether it be grants, whether it be low interest loans to certain categories. So um, make sure that you're building the relationships is the common theme here. And
right.
then what you may not have to be so codependent on your business credit to do would be to consider a factoring company. And I know we've touched on this in previous episodes, but I wanted to give a little bit of more of an example of an example of terms that a factoring company or that you should expect them to sort of present to you. And the way that they sort of work is, and this would be if you can't negotiate with your supplier, right? Because if you can negotiate with your supplier in the previous example provided, you don't need a factoring company. You don't need to add that extra overhead onto your order, right? So the fee varies based on the factors that the company sets forth, and all the companies are different. So for one example, we'll front you X amount of dollars and pay your supplier, and then you pay us 4.5% when you get paid up to the first 30 days. Now, day 31 to 60 might be 5.5 or 6.5%. So what that means is if let's say you're new, let's say this is your first time in wide area workflow, and you're trying to send your invoice to the government and you've missed a period or a dot somewhere,
Oh,
and
yes.
the
About that.
government does not accept your invoice, that clock ticks no matter
And
what.
you're on that customer service line calling and going back and forth and opening a
You're
ticket.
emailing your contracting
I'm
officer.
a small business, fast pay. Yeah, I know.
Very much so. So knowing these and preemptively making sure that before you make that decision, understand wide area workflow, understand, there's a lot of training out there on wide area workflow. Get with your contracting officer, before it comes time where, oh crap, now my percentage is increased on my fee because I'm 45 days late and I don't know what I'm doing. Keep the communication open. Don't let yourself be in that position.
Yeah, and in regards to the factory, I mean, there's two different kinds. So really look into the type that you want to get. Most people, I think, really just want contract factoring. Um, it's different than invoice factoring. So invoice factoring is if you are doing a 5-year service project, right? And you have constant payroll. And every month you don't anticipate the amount of money that you're going to get to be enough to cover next month's payroll because you have a huge operation, right? So you are, the invoice factoring is I need to bill the factoring company this invoice and have them loan me the money for a fee so that I can pay my people and you can do that, semi-monthly, whatever, whenever you do payroll. It doesn't even have to be just monthly. So they keep you kind of going. It can be very expensive after a while, but that is a methodology that people use quite often. You would be surprised at the large companies that utilize that still are cash broke. And everything is just honestly provided by factoring. Um, but if you're gonna, let's say, do something that's really just a quick one and done, I gotta buy this piece of hardware and I gotta deliver it, and it's like a 3-month time frame. You can look into contract funding, which you take your contract that you've been awarded, you go to the bank and you say, look, I'm gonna get money. And so they come to you and they give you your, I think 85 to 90%. They don't cover your profit, but they will cover your hardware costs. And so then they will cover your labor, whatever you need to do to fund it, they will provide you that amount. And then you are able to go ahead, execute the contract. When you are paid back, the bank collects their fee, their interest rather, and gives you back your profit. So those are two different options that you can utilize when it comes to factoring.
And we do have a question from the audience. Would this be advisable for a brand new startup with no credit savings? And I can't be sure when it was posted and which one we were discussing at the time the question was asked. So T, if you want to elaborate, we'll be happy to sort of guide you in the right direction. And, you know, there are so many different ways. We haven't even talked about private funding yet. I've
Yeah.
actually had clients scale their businesses by, giving up just a couple of percent of their company, to a shareholder that invested. Um, that would always be an option, which you don't need any credit to
Yep.
do. You need a relationship. And if you notice, the common theme and the one I'm about to talk about also includes relationships, right? We've also seen where your teaming partners, your prime contractors,
Mhm.
will sort of front you the money to support your part of the contract. And
Yep.
then obviously when they get paid from the government, you only get the difference between what they owe you and what they fronted you. So the sort of driving theme here, um, while you're building your business credit, there are other options to fund. But the key is to be very selective on the contracts that you pursue. If you're not sure how you're going to fund a contract, do not bid on it. And if you haven't done this homework, and I always say pick three, that's what the government does. You get a few quotes, you pick the best value.
Mhm.
Evaluate different companies, evaluate different lenders, see which ones have the better offer. And a lot of the time when they really want your business, they'll tell you what you need to do to get approved for that loan.
Yeah.
That might be adding some payment history to Duns. That might be, getting a smaller loan. And then in a few months, once you get that paid off, getting a larger loan to establish positive payment history. Like every institution is different. So I definitely recommend build a relationship with your banker. They often, like Natasha says, have financial advisors on staff. They want to
Help
help
you.
you build your credit because they make more money when you do,
Yeah.
right? You borrow money, they get the interest. It's kind of a win-win for everybody. Let's see if we have any more questions.
Yeah, I think like if you're a new business and you're just starting, I know a majority of the folks that I encounter, um, they they're just starting. Like like when I talk about like just starting your business, you just got your EIN number. You just set up your LLC. So at that, and let's be real, I'm very straight up. Like if you some people don't want to hear that. Some people don't want to hear I gotta spend all this time building my credit and blah blah blah. I mean, it's hard times for everybody. I get it. It's gonna take time to build your credit. You have to have income. You're dying to quit that job. I don't want to do my 9 to 5 no more. I got you. Look into factoring. Look into factoring. Factoring, you're gonna pay a higher percentage. Let's understand that. But if you get really smart and you utilize the profit margins that you make off that contract to fund your next contract versus borrowing again, you won't forever give the bank all of your profits. Because not everything is, the most profitable. Plus, you don't want to outbid yourself if you use factoring because of the high profit margins that it
Right.
ends up in.
All
So
of that should be taken
have a
into
plan.
consideration. Hmm.
But if you absolutely do not want to wait for credit building, if you don't have some magical person who can loan you some money and you don't have anything in savings and your credit is shot, factoring, that's all I can say.
Essentially, because look, it's kind of low risk.
Mhm.
Don't go bidding on millions of dollars in
You're
contracts. I would play
not
on
gonna win
this one
anyways.
first, play on something that's low dollar amount, low risk, build a couple of those up, so that you have past performance and you look more trustworthy to the government. There are other funding options for those of you who might have innovative products or services like the SBIR and STTR and DPA Title III. I mean, that's an area that I've sort of just started kind of digging into myself and understanding. The government does often match you in that scenario. If they want to manufacture something and need something for national defense, you don't have a warehouse, you don't have a line, an assembly line, they're willing to match your funds. So definitely check out DPA Title III if you're interested in getting into manufacturing and are looking for ways to sort of subsidize. You've also got challenge.gov. Anybody checked out challenge.gov recently? They've got some
Oh,
pretty
what's
cool
that?
things on
Teach me something
challenge.gov.
new today. What's challenge.gov?
So this came out, correct me if I'm wrong, around COVID. It was
Uh-huh.
really super quiet, like crickets,
Well, that's
because the
because you
only
were dealing with aliens.
everybody, right, all the businesses were closed. And me, the nerd that I am, I'm on
Mhm.
government websites, following a rabbit
Well, I
hole,
was
and I
playing video
landed
game.
I landed on this challenge.gov initiative where sort of new and innovative programs coming up with new processes,
Oh, I
to
like
do certain
this.
things. There was one on there related to training human trafficking program, a way to combat that. And basically, they're giving out prizes to the finalists, who wins the challenge. So, it's similar to kind of submitting a proposal. In a lot of cases, you're submitting a plan, with your proposal, and then it comes with an award, a
Like
monetary
that.
award. You do not have to pay back. It's
Hmm.
sort of free money, for those of you who see innovative ways to handle, some of our nation's issues. Keep an eye out on challenge.gov and see if there's something in your wheelhouse. That would be a great way to fund a contract, is land in one of those.
Yeah, it kind of reminds me of Sibbers. So,
A little bit.
I'm writing one right now, Sibbers,
Not
and
exclusive to technology.
yeah, it's
There
not
is some
exclusive.
technology, but not exclusively.
I have one guy. Well, I mean, we're all young here. We have one guy who's like a game developer. He does video games and stuff like that. And he has like all these ideas and the creative type. And looking in Cibers, they have tons of opportunities where you can create game development, right? Teaching the army with artificial intelligence and cadets and training them. And his eyes lit up because you think that you have to have a product to sell to the government, and then you learn that the government will pay for you to innovate that product, create it, and then they will pay for you to commercialize it because it ultimately benefits them. And they want innovation. They want new products. We have to constantly, continuously be ahead of the game. So yeah, look into all of that because you can get really excited down that rabbit hole till 3 in the morning. Have at it.
Oh, yeah. I mean, not today, not this week. Check in with me again around summer, but and that's a good point. Thank you, Deshaun. One of our viewers mentioned the Assignment of Claims Act. So FAR, here we go into FAR. You guys know how much I
Yay,
love
let's go.
subpart
That's my
32.8
far book. Hold up.
is the assignment of claims. So under the Assignment of Claims Act, a contractor may assign monies due or to become due under the contract if all of the following conditions are met. The contractor specifies payments aggregating $1,000 or more. The assignment is made to a bank, a trust, or other financing institution, including any federal lending agency. The contract does not prohibit the assignment. And D, unless otherwise expressly permitted in the contract. Oh, wait, I'm sorry. Not and D. We still have plenty more to go. Unless otherwise expressly permitted in the contract, the assignment covers the unpaid amounts payable under the contract, is made only to one party, except that any assignment may be made to one party as an agent or trustee and is not subject to further assignment. So you can't go an assignment again. And lastly, this one is the last one, I promise. The assignee sends a written notice of assignment together with a true copy of the assignment instrument to the contracting officer or agency head. surety on any bond applicable to the contract, and disbursing officer designated in the contract to make payment. Now, I'm going to go ahead and drop this link into the chat for anybody who wants to review. I am not a legal analyst. I am not a lawyer. I'm a CFCM in training. So take it easy on me, guys.
Nobody wants to read the FAR on a Thursday night.
I mean, it is completely valid here. So I do appreciate Deshaun bringing it up.
I do. I think it's really amazing that someone actually knew that.
Yeah, I appreciate
I'm
it.
more impressed. I'm
I'm
like,
very
yeah.
much impressed. Deshaun, do you want to be a guest?
Acquisitions.gov, folks.
Yeah.
Acquisitions.gov.
Yep. Acquisition.gov.
Well, it's easier
You'll
than the
find a
book
lot of
we read.
goodies. What's that?
Easier. I said it's easier than reading the FAR book that we read in the classes that we had to take. No,
Very
not a
much
bad
so.
situation.
I've been consumed with DAU for the past year and a half. So it's mind numbing. And I have to say, those of you who are in government and you look at that and use that all day, every day, my heart goes out to you. Thank you for what you do, because I'm a strategist. I like the strategy. I
Yeah.
like figuring out, following the money, figuring out who buys what I sell, how do they buy what I sell, and how am I going to get that business? Like, that's my wheelhouse. So, but I know in order to get there, sometimes we have to make sure that we're planning appropriately. And that's why we wanted to have this today. I hope that we were able to answer the questions that were previously submitted. And we are planning our sessions out. We are going to be having some guests. So if anyone listening in today would like to be a guest, please do reach out to myself, reach out to Natasha. We would love to have you on. Whether you're a contractor, you want to tell your story. I love that. I love hearing how, those who are really making a dent in the government contracting space, how they first started. I
Yeah.
mean, sometimes it's hard to believe. And those stories are very much how much of our audience are feeling now. I can seem like a long sales process, and it is. It very much is, but it's the nature of the beast, and there's a huge reward at the end of the day.
Yeah, and we always say it. If it was easy, everyone would do it, right? So if it's worth it, it's got to be a little hard. It's got to be a little hard,
Right.
but it is very much worth it. So, um, lessons learned. I would love to have people jumping on and sharing their lessons learned, what they wish they would have known before they got into it, how hard it was for them, or how easy it was for them. Definitely really excited about having some guests on.
Yes, and it's also excellent to get perspectives from different industries, because
Hmm.
contrary to popular belief, you know, those who have a vested interest to sell you a $10,000 course are not going to tell you that your strategy is going to be completely dependent on what it is you do. So,
Shots fired. I love it.
I mean, that's true. I'm not going to sugarcoat anything for anyone. Um, I do not give very much advice to anyone in particular unless I have looked at their market. I have checked the
Yeah.
propensity. I know that way I can guide you as to what you're going to need, how you're going to do it, and
Mhm.
the actual timeline. The timeline expectation is important.
Yeah.
It really is. But
Yeah.
also don't discount subcontracting, because if you have one of those valuable skill sets and you might make or bring value to an existing contract. I've seen primes sponsor facility clearances. I've seen them literally
Oh
outright pay
yeah. Those are
bills,
the
give you
best.
access to their GovWin.
Hmm.
I mean,
All their resources.
like, their proposal team becomes your proposal team. I mean,
Hmm. You
and
become rich
folks,
overnight, barely.
right?
You got a
This is
whole
always
operational setup. Like that's it.
Yes, it's always been a relationships game, and it's
Mhm.
only literally been in the last 2 to 3 years that there's ever been anything different said.
Yeah,
So
that's true. That's very
trust
true.
but verify everything you hear, always, everything.
I've
All
won a
right.
100 million. Check it. Check
Yeah, if anybody tells you they
check it.
won any amount of contracts, please fpds.gov.
Everyone's a
Punch in the
GovCon
UEI of their company,
expert.
and you'll see exactly how many contracts they've won.
Yeah,
There's only one person on the market that comes to mind that actually has won what they said that they've won.
that's for another podcast.
Another day for yeah, it's another episode altogether.
It's
But
a
do your
gossipy.
homework. Yep, do your homework. Make sure that you are just doing your due diligence. And if all else fails, check usaspending.gov. It's free. So don't let anyone sell you on anything that maybe not be appropriate for your industry or what it is that you
And
really need.
honestly, let's be real. If you're selling 100 to $500 million in wins, you've got time to be on YouTube and all over the place. I don't know. I don't know. You got
If I
business
have
to
money, you
run.
think I'm going to go teach all of my competitors how to compete
I did
against
it.
me?
Mm, I'm selling a course because I ain't making it in this world. Yeah.
Well, my dear, it has been a pleasure.
As always, next Thursday to everyone.
Yes, next Thursday, same time, same place. And we are going to talk about building your GovCon dream team, how to grow your team. You know, a lot of us, most of us start out as just one person.
Yep. I
What's
like
the
that.
next essential team member that you need? So join us next week, same time, same place. That's what we're going to dig into. All right, guys, have a good weekend.
Bye.
Bye bye.